China needs the US more than ever. You see, China's debt problem is bad, really bad. And if this single thing happens, the whole economy could collapse. Beijing has just begun to acknowledge its deep financial problems, and the size of China's debt problem is truly staggering. At a last measure, debt of all sorts, public and private, and in all sectors of the economy, amounted to the equivalent of 51.9 trillion, almost 3 times the size of China's economy. This is the highest level recorded in the 27 years since Beijing first began to track these statistics. And according to the Beijing-backed National Institution for Finance and Development, local authorities are set to issue new debt next year, aiming to the equivalent of $570 billion. And China's debt overhang far exceeds the burdens facing the United States. As recently as 2020, total debt in the United States relative to GDP exceeded China's. But as of mid-2022, China's relative debt burden stood at 40% higher than America's. And if this comparison doesn't highlight China's precarious situation, it is worth considering that more developed countries, such as the United States, tend to have higher relative debt burdens and can support them more easily than less developed economies, such as China's. And looking for somebody to blame, local governments seem to be the culprit in China's overall debt crisis. And it's not that these local governments don't follow policies, they do, but they have been used as tools of the central planners in Beijing. You see, when these planners launch a spending program, such as the recent infrastructure building plan, they look to local governments to issue the debt needed to finance the effort. And this is where the problem lies. This debt has grown 11% through the middle of 2022 and continues to grow drastically year over year. And behind these frightening trends lie 2 more fundamental problems confronting China's economy and its financial markets. The first of which is China's demographic imperative. You see, Beijing for decades imposed a one-child rule on families and are now facing a drastic decline in young workers. And it's only going to get worse in the coming years. Summarizing the Pew Research Center, there's estimates that China's population has already begun to decline and that soon the economy will have less than 3 people of working age for every retiree. And because these 3 workers cannot possibly produce the required surplus, Beijing will have to use debt to support its social security pensions. On a more fundamental level, the debt also reflects an essential of communist economic management. Unlike a predominantly market-based system, where diverse actors pursue a vast variety of investments, China's reliance on centralized direction dominated by state-owned enterprise tends to channel economic resources into a few grand programs. And of course, when these are successful, the results are impressive. But when they miss hard. The losses in the accompanying debt can grow to massive proportions. The best example of this is the recent property development failures. The size of these failures reflects the huge emphasis central planners previously placed on residential construction. So large, in fact, that at its height, the sector amounted to an outlandish 30% of the economy. And China may have changed direction, but the debt remains the same, and the failed developments cannot support it. Nor is real estate the only mistake. So we've clarified that China's debt is bad. But how does that affect a US default? Well, what would happen in a US default? Truthfully, no one knows for sure. The world economy is just too complex. One real possibility, though, is that a global financial crisis would happen, worse even than the one in 2008 and 2009. This is because the huge US Treasury market underpins the global financial system. Much credit around the world is priced, directly or indirectly, in relation to the interest rates of the US Treasury. And many loans, both in the United States and in the rest of the world, depend on the US Treasury as collateral. And this brings us to our first problem for China. In a default, interest rates on US Treasuries would skyrocket, and Treasuries might no longer be usable for collateral. The entire world financial system would simply freeze. Moreover, one of the main tools used to contain the 2008 and 2009 crisis, massive money creation by the Federal Reserve, most likely won't work. And any economy holding massive loads of debt, well, they'll crash too. The impact of a US debt default would be devastating. But many countries could survive by unleashing massive economic stimulus programs, and they would still maintain the ability to take on debt to fund these programs. In fact, 15 years ago during the 2008 and 2009 financial crisis, China's government did exactly this. At that time, their debt level was sitting at 140% of GDP, which, all things considered, is relatively low, and they also had a significant need for infrastructure and housing, so there was a lot of room for economic development. But now we look at today. Debt has soared to nearly 300% of GDP, and both infrastructure and housing are seriously overbuilt. A common argument is that if the United States defaults, China could step in and replace the US as the world's economic hub. But this is essentially impossible. China's government bond market is nowhere near big enough, liquid enough, or integrated enough with the rest of the world to substitute for the US Treasury. The total value of Chinese government bonds sit at $3.3 trillion, which is less than half the value of US Treasuries held by foreigners. The foreign holdings of Chinese government bonds are a mere $340 billion, 1/20th of the country's Treasury holdings. The daily turnover of China's government bond market is $30 billion, which is only 5% of the Treasury's market average. And China's already tried it before. After the 2008 and 2009 crisis, it decided that it was too dependent on the dollar and tried to internationalize its own currency. And they found very little success with this. 15 years later, their currency makes up just 2.4% of global trading. In short, if the US does default on its debt, it's going to be devastating for the world economy. But most nations will survive in one way or another. China, though? China's looking down the barrel of a gun. And if the US does default, China could be looking at an economic collapse, the likes we've never seen. And this is why China can't let the US default on its debt. If you want to better understand the US debt and how it could affect the world economy, click this link.